Good evening, everyone, and welcome. I'm going to give participants another minute to join us, just in case there are individuals that are having technical difficulties joining. So we should start in about a minute. Okay, so I see that a couple of individuals have joined already. So again, good evening and welcome everyone. Thank you for joining us this evening for the first webinar of a 5-part webinar series on first-time home buyers, your pathway to home ownership. I'm Suhey Mojica. I'm the Senior Coordinator of Business and Assets for the San Pablo EDC. And presenting with me today will be Lisa Marie Weathers. And just before we get started, there are some housekeeping items before we get started. This webinar is being recorded. A recording will be available to our website, on our website at sanpabloedc.org. Any resources mentioned during the presentation will also be available on our website. We welcome your questions, so please type them in the Q&A box or in the chat, since everyone will be muted. We will answer them during and at the end of the webinar if time permits. Just to give you a little bit of background before we get started with our presenter, the San Pablo Economic Development Corporation, some of the services that we offer are technical assistance for businesses, membership and sponsorship benefits, access to capital, home ownership, job development and career counseling, degrees and certified training, and employment and support services. And today our presenter is, like I mentioned earlier, Lisa Marie Weathers. She is from C2 Financial Corporation. Lisa has been living her passion of helping first-time home buyers since 2002. First as a loan officer with 2 of the nation's largest mortgage banks, then as a certified nonprofit housing counselor and an educator, and currently as a licensed and federally endorsed mortgage broker. Where others say not possible, Lisa says, here's how. So with further ado, what Lisa is going to be discussing today is it's owning a home right for you, steps in the home buying process, the home ownership team, mortgage payment, and other costs. And so with that, I will let Lisa take over the presentation. And yeah, so I hope you guys find this valuable tonight. Take it away.
Okay. Thank you, Suhey, and good evening, everyone. I just want to congratulate you on taking this first step to get some information, to empower yourself to actually, hopefully one day become a homeowner, hopefully sooner rather than later, but not before you're ready. You probably know some of the advantages of home ownership, but let's just go over the general big picture. First of all, most importantly, you want to know that you have a home to live in and that you have stable housing costs. So unless you get a loan that has really risky features, you probably are going to know that your mortgage payment is going to be the same on the first month as it is on the 360th month. Most mortgages for first-time homebuyers will be a 30-year fixed mortgage, and you'll have 360 payments. Actually, your 259th payment will be the same as the first payment. Usually the last payment is going to be a little bit lower, but in reality, most people are not going to keep the mortgage for the full 30 years. Most times people are going to refinance for various reasons. Another big benefit of being a homeowner is the tax benefit. Of course, I'm not a tax professional. I can't give you tax advice, but I can say that historically speaking, there's a huge tax advantage to owning a home, because whatever interest that you're going to pay on the mortgage, you can usually write that off. Of course, I'll always tell you to talk to your tax advisor, and they'll be able to set it up for you properly. But just to give you an idea, the idea of buying a home can sometimes be daunting when you think about, especially living in the Bay Area, what you're going to pay every month. Can be, that number is usually mind-boggling for people outside of the Bay Area. And that makes sense because, you know, sometimes you're going to be paying $250,000 to $500,000 or more, and those payments can really be shocking to you. But just to show you the tax benefit, the IRS has a website set up where you can actually click on a link, and we'll talk about that later on as we go through this series, where you can actually go in there and tell the system what your income is, how many deductions you have right now, how many dependents you have. You know, if you're contributing to a 401k or anything like that, you put that information into the system and it will tell you how many dependents you can claim or deductions. And it will shock you because very often, just based on the numbers in the Bay Area, if you put everything in properly, and this is the IRS website, it'll tell you you might be able to claim 11 dependents. And that's just to get you to a point where you're going to bring home more with each paycheck so that you can actually afford your mortgage. And the benefit of that is that instead of waiting at the end till the end of the tax year to get a big refund, you're actually going to bring home more of that money with every paycheck, so it'll be more comfortable. Another benefit of homeownership is, of course, building equity. And if you don't know what equity is, that's just value in your home. To give an example, I have borrowers who have bought homes over the last, maybe 5-6 years. And prices are going up constantly. And of course, once you get your mortgage together and you start making your payments, every payment is going to reduce your principal. In the beginning, you're not reducing the principal much, but over time, as you pay on that mortgage, you're paying more and more of your principal down. And also as time goes on, especially in the Bay Area, your values are starting to go up. So I have some clients that I have worked with, started exactly where you are as first-time home buyers trying to get information about buying a home. And they bought a home in Pinole for, I would say maybe 5 or 6 years ago in Pinole, and they paid around $400,000, and they're getting ready to refinance, meaning they want to pay off some bills, they want to get a new loan, pay off their first loan, and then take out some cash in their home, from their home. Their value, they bought for around $400,000. Their value now is about $785,000. So that's what equity is. As you're paying into your mortgage, you're paying off the balance, but as you live in that home, it's developing, the value of it is growing. So that's a huge benefit. And that's where you can use some of that money to, most people use it to help pay for college, to do all kinds of things to make life, more enjoyable. Another benefit of homeownership is just basically having control over your environment. If you think about it now, if you're renting, chances are you can't do whatever you want. Maybe you have a child that wants to have a purple bedroom or a black bedroom, whatever it might be. As a renter, that's probably not going to be the smartest thing to do. But if it's your home, you can paint the walls whatever color you want. You also, there are always restrictions. There are rules if you have a homeowners association, lots of things to consider. But in general, you really have control over your home when you own it. No one can tell you what to do or how to do it. And again, stability, meaning you know what your housing costs are going to be. You know that you have a home to live in, and maybe hopefully something to pass on to future generations to build that generational wealth. Okay, next slide. Now, disadvantages of homeownership, as first-time home buyers, which I assume most of the people on the call will be, you don't really think about the downside. You just want to get in, but you really should, take the time. Now that you're starting out on this process, you should really take the time and think it all through and make sure that this really is something that you want to do, because, you know, your mortgage payment is going to be due regardless. You know, every month that payment is going to be due, and when you don't make it, horrible things happen. You really have, the monthly costs are not the same as what they would be as renters. So if you're renting a home, you know, the toilet overflows, something happens, you can call your landlord, and it's their responsibility to have someone come out and make the repairs, do whatever needs to be done to make your house livable. But of course, when it's your house, the toilet blows up, it's your responsibility. So you have to keep that in mind. And one thing that you must do as a homeowner is you must have a cushion. You know, you may hear your parents, grandparents talk about having a savings or a cushion or a nest egg for a rainy day. When you're coming into home ownership, you definitely need to, even if you can get a loan without having what we call reserves, you really should start now, even if it's just putting a little bit aside, have some money set aside, because you never know what is going to happen, and there's no guarantee that things are going to be smooth. You know, you just don't know. Decreased mobility, it basically just means that once you buy the home, unless it's a mobile home, you're stuck. You can't just, you know, move the home if you decide you want to move to Florida or something. Of course, you know, there are always options, especially in the Bay Area. You probably have equity, and you can move, but when you own a home, you've got to make sure that you take into account what's going to happen. Make sure that your payments are going to be made, even if you aren't going to be living there. Ideally, because you're a first-time home buyer and you might be trying to access down payment assistance funds, various programs for first-time home buyers, you are going to be required to stay in that home and if you don't, if you're going to move, you're going to have to refinance possibly and pay off whoever helped you get into a home. And then finally, realistically speaking, in the Bay Area, your first home is probably not going to be your dream home. So, you know, it's not going to have the pool and whatever else it is that you just love and, you know, you want to have in your home. So just keep that in mind. There are options to help you get closer to the reality of your dream, and we'll discuss those as well. One of which is possibly building a home. Now, the process of buying a home, like I said, can be really daunting. But this is where you really have to partner with people who have been through the process, who understand it, and who can help you through it. And that's where people like me, people like Suhei, various nonprofits, your real estate agent, all those people, and we'll talk about the people on your team. But the steps are pretty straightforward. You're doing a part of the first step right now. So you want to attend most programs if you're going to get some down payment assistance. They want to make sure that you have some education, and very often that education needs to be HUD certified. So it needs to be a program, usually 8 hours, that you can either do in person, especially now with COVID. You can do it in person or online. There may or may not be a cost attached, but usually it's going to be a series of workshops that may last for a few hours, up to 8 hours, to basically really give you a good foundation so you understand what you're getting into. Part of that process also will be helping you determine how much you can afford, what your payments are going to be, and you know, really what you need in a home. Do you really need 4 bedrooms and an office, or can you get by with 2 bedrooms, you know, and a garage that you can work out of? It's kind of really, when you're starting to buy a home, you really have to just be realistic about what is possible, especially here in the Bay Area. Something that is critical when you're shopping for a home is making sure that you are actually qualified and eligible to buy a home before you go out shopping. You're not gonna, it's not a good idea to just meet with a real estate agent and say, okay, I want to buy a home. Excuse me. it's not a good idea to meet with a real estate agent and say, I think I can afford 500,000 and start shopping if your budget is really 300,000. So the important thing is to meet with the lender, whatever lender you choose to use, and what they will do is actually collect your information, all of your documents. They will pull your credit. They will look at your income, your assets, and your history in general, your work history as well, to figure out exactly what you're qualified for. Once you have a reliable lender that you're working with, go through all of your information. They will give you what's called a pre-approval letter. And that is what you can use to shop with, because then that tells your real estate agent, and that also tells the seller and other real estate agents that they have a borrower who has been vetted and who actually is qualified to buy a home. And so that's usually the first thing that you want to do when you're actually ready to start shopping, is to have a valid pre-approval letter. And then you get out there and you start looking at homes, hopefully that are within your price range. Usually you're going to get from your lender a listing of what your maximum price is, and then you should be starting below, looking at properties below that, not trying to start out at the top of your buying power, because things can always change. You may come in and get pre-approved today for 3, 4, 500,000, but then rates could change, prices could change. You just never know. Your lender is usually going to give you a little bit of wiggle room to give you time to actually find a property, make an offer, and have your offer accepted. And then when that time comes, you'll still be qualified. When you actually have an offer accepted, hopefully you'll still be qualified for the loan that you're looking to get. Once you have your offer accepted, you've been searching for homes, you find one that you love. I'm going to warn you that it's a process, because I have people who have looked for homes for months. Sometimes it may take a year just to find something that's suitable and that you can get your offer accepted on, because it's very competitive. But let's say that happy day comes, you find a property, you put in an offer, and your offer is accepted. One of the first things that you want to do once your offer is accepted is, first of all, you're going to have to put in what's called an earnest money deposit, where it can be 1,000, 5,000, and that's negotiable between you and the seller and the agents. But you're going to put in an earnest money deposit that basically tells the seller, okay, you have my letter saying that I'm pre-approved for this amount of money. Here is my good faith money to let you know that I'm serious. I'm going through the process of making sure that this is the home that I really want to proceed on. So you'll have an offer accepted. The home will be held for you, and that's when you start doing your inspections, right? You have a home inspection that is really important for you, more important than anybody else, because you really want to know what you're buying. So when it comes to a home inspection in California, you're going to have someone come out who is experienced in looking at homes and understanding what they're looking at. Because you, as a first-time home buyer, may not know that this particular house is slanted, or it has trouble with the foundation, or there's an active termite infestation. And those are the things that you need a home inspector to come out and look at. And so typically what happens with that, it's a good idea for you to be there with the inspector, because they're going to come to the home and they're going to have usually a digital camera, and they're going to go through that house from top to bottom, and they're going to take pictures, and then they're going to give you a report at the end that tells you everything that they could see without opening up the walls. This is what's going on with this house. There might be light fixtures, like minor things that can be fixed that don't inhibit you from moving into the property, but there might also be health and safety things that you may not be able to see that are wrong with the house, that the home inspector can tell you, so that you can really decide, okay, am I going to proceed with this house? And it also can give you bargaining tools to use with the homeowner, so that you can say, okay, yes, I still want to buy this home, but I offered X amount of dollars, but my home inspector showed that X, Y, and Z is wrong. Maybe there's an old leak in the roof, or, there's wires, that aren't safe. In addition, a lender is not going to allow you to buy a home that's not safe and inhabitable, that basically has that it has to be safe and sanitary, is basically what your lender wants to see. They don't necessarily need to see the home inspection, but they will look at the appraiser to say, is there anything that's visible to you? And we'll talk about appraisers pretty soon. That tells us that this home is not ready. So the home inspection, even when others might tell you, no, you don't need it, it's a tool to protect you as the homeowner, or as a new potential homeowner. You should definitely get a home inspection to make sure you understand what you're getting into. It won't tell you everything, but it'll give you a good idea. We already talked about applying for the mortgage loan, but to go into a little bit more depth with that, a mortgage lender is going to want to know the same things that you would want to know if you were lending someone $250,000 to $500,000. They generally want to know, one, am I going to get paid back? That's one. Number two, will I be paid back on time? And number three, does this person have the ability, even if they are really nice, do they have the ability to pay me on time and pay me back? So that's generally what a lender is looking for, the same thing that you would be looking for. And then a big thing that you need to be aware of is that no lender is going to lend on a home unless the house is insured before you close. And why do you think that might be? Because, you might sign on the dotted line today, and as soon as we're done signing, that house could burn to the ground. And then you have a loan that you have to pay on, and you have a home that's burned down with no insurance. So a smart thing to do, once you know that you are going to buy a home, you need to start looking around for insurance providers. A good place to start, forgive me for my voice, I'm struggling here, obviously, so I'll be taking a little sip every now and again, but my voice is challenging, but I can proceed. So the first place that I always recommend that you start with homeowner insurance is your insurer for your car. Usually when you already have a relationship with an insurer, they will give you discounts for, bundling. And if you already have your homeowners, your car insurance, or even renter's insurance, and you want to buy a home, they will give you a discount. So that's the first place. It does not mean that that's where you're going to end up, but that'll give you an idea of where you're going to start. And then you can shop around. You can ask friends, family members, but you have to have insurance in place at the time your loan closes. In order to actually buy a home, you've got to have insurance. Next slide.
Before we could proceed,
yes.
Lisa, we do
yes.
have a question, and I don't know if you want me to read it now, or you want me
Yeah,
to
sure, go ahead.
I know we have 20 more slides to go, and it's about 5:27. So the question, yeah, time flies. So the question is, I'm thinking of purchasing a home with my friend. Would we each be able to apply for a first-time homebuyer program, such as down payment assistance? Do you want to answer that?
Yes, I'll be quick. Now, two people who are not married, or you don't even have to necessarily know each other. You can definitely buy a home together. But when it comes to down payment assistance, you're going to be treated as, typically you're going to be treated as one household, and whatever you're qualified for as a team together is what you'll get. You won't be able to get, you know, two bites of the apple, so to speak. The only way to do that is if you do it separately, and you might not be able to qualify separately. So you kind of pick your poison.
I think I'll add a little bit to that.
Yes.
So some of the programs that we do administer at San Pablo EDC, you can definitely buy a home with, you know, a roommate or someone outside of your family. But like Lisa did mention, you will be seen as one household. And based on how many people are going to be living in that household, they take into account anyone that's 18 and over and that has an income. Yeah. So most of these programs, as I mentioned at the beginning of this webinar, this is a series. So our last series, which is sometime in November, I believe, we will be talking about special financing, and we'll be diving deeper into these programs. So it'll actually be broken down in terms of eligibility and what it is required in order to use these programs. But yes, like Lisa said, there is no stipulation as to you have to be either married or family member to buy a property. That's totally open. But like Lisa said, if in the future that person wants to buy a property and they want to qualify for a down payment assistance program, it might limit them because they're already a homeowner. So that's something you want to keep into account. And I will go ahead and proceed with the.
Yeah. Okay, so these are the steps, and I realize that we're running out of time. So we're gonna run quickly through these. Okay, let's talk about your home buying team. This is all pretty, all of this doesn't necessarily apply to every home buyer, but definitely if you're using any kind of a down payment assistance program, you're gonna need a housing counselor, homeownership counselor. They're usually attached to a nonprofit, and they're gonna help you. Sometimes they can connect you with down payment assistance programs, but usually what they're gonna help you with is home buyer education. So that's one, a huge person in the whole process that you're usually not gonna be able to get through the process without is your real estate agent. Of course, that's the person who is licensed by the state of California to show you properties and basically meet with you wherever you are, figure out what your needs are and your wants are. You'll have, you definitely need X, Y, and Z, and then certain things that you might want. And they will figure out, send you homes that hopefully match your criteria and that are within your budget. And then they'll just take you through the process and of making offers and negotiating until you actually get a home, an offer accepted on a home. Of course, you need a lender unless you're going to pay cash, and most people aren't. You're going to need a lender to actually do the loan for you, to send the money into escrow to pay. And then your escrow agent, usually you're not going to have much contact with the escrow agent. In California, we don't really use attorneys. We use title and escrow companies, and usually they're all in one. And you don't really know the difference between those two, but they're critical in the process because the title company is, their purpose is to make sure that when you buy this property, you're going to get it with a title that has no clouds on it. So there's not going to be anyone who's going to come out of the woodwork, 5 years into the process and say, this is actually my home that was deeded over to me, and you don't actually own it. So, and that does happen. Actually, I recently had a borrower who bought a home maybe like 2 years ago. He used some down payment assistance. He bought title insurance. And a couple years into the process, someone came and made a claim on the property saying that they were the rightful owner. Thankfully, he had title insurance, and so he was protected. and the title company was responsible for cleaning that mess up. But what they do is basically search the public record, make sure that there are no what's called clouds on the title, and that the person who is selling or people who are selling the property to you actually own the house and have the legal right to sell it. And then the escrow officer also works in conjunction with the title officer. And what the escrow officer does is they're basically the neutral third party that is in the process responsible to make sure that all sides, both the seller's side and the buyer's side, that the contract that they what they agreed to is going to be followed, and that the money is going to go where it's supposed to go. So at the end of the day, when the loan closes, you will know that you have a clean title, and the seller will get, and whoever is owed money on that property will be paid. We already discussed the home inspector, a critical person. The appraiser, as we probably all know, is a person who is licensed, and they are, their job is to tell us, the lender and the agents, everybody, the seller, what the market value of the property is. And usually they're going to do that by looking at the property and properties nearby that are similar in characteristics. They're called comps or comparables. So the appraiser has a process where they're going to go through, come to the home, take pictures, and make adjustments for whatever the amenities are in the property, and then come up with a value. It used to be back in the day, before the market crash in 2007, where values were coming back. Values were just through the roof because there was no line between a lender and an appraiser, and sometimes they had relationships, and sometimes properties sold for more than what they really should have sold for. But you don't have to worry about that anymore. The rules have changed. Now there's a definite separation between the appraiser and lenders, and the appraiser is independent. So whatever value they come up with, you can have a little bit more security about the actual value of the home, and that you're not paying more than what you should. A surveyor is not someone that we see very often here in the Bay Area, but some lenders will require you to get a survey, and basically all that does is shows you where the property lines are drawn so that you know that this is where your property is. And that's important because it's possible that you could buy a home where either the house that you think is yours is partially on someone else's property, or their home might be, or their fence might be on your property. So some lenders will require a survey, but usually that's not an issue. And then, of course, we just spoke of the insurance agent. Critical, you cannot close a loan until you have valid insurance in place at the time of closing. Next slide. So your buyer's agent, we talked a little bit about that. Generally speaking, when you're living in the Bay Area, you're gonna kind of be humble pretty quickly when you see what you're gonna get for your money. It breaks my heart sometimes to see people who are struggling to get an offer accepted because it's so competitive, and they end up spending, their whole budget. It might be $500,000, it might be $400,000, and when you see the home that they get, it's kind of like, wow, if you went to Texas, you could get a mansion for that. So when you meet with your real estate agent, one of the things that they're going to do is help you understand what is possible, what is not possible, and then help you get comfortable with what you're actually going to be buying. Because keep in mind, we're in the Bay Area and it's limited land, and we're not going to get any more, and we're kind of stuck with what's here. So the good news is that your values are typically, historically speaking, going to go up. A part of what your agent does is, look at the neighborhoods that you want, make suggestions. They search around, find properties that meet your criteria. And they, generally speaking, send you listings regularly for you to either go and look in person, or in COVID, now you could do virtual tours to figure out, to narrow down neighborhoods that you want to be into, homes that are on the market that you qualify for. And they basically hold your hand through the process and help you understand all of the paperwork and everything that is needed for you to be able to actually get into a home that you can afford, and that hopefully that you'll be able to sustain and, you know, stay in until you're ready to move. Next slide. Finding an agent, not that difficult, especially now with being online. You can, you know, Google everything. But a good place to start is with friends and relatives, because the people who've had, that you know, who've had good experiences usually can recommend people. I mean, it could be, they can recommend real estate agents, they can recommend insurance agents, they can recommend even counseling agencies, whatever you need. But definitely take advantage of your circle of friends and family, because they're invaluable. We talked about going on websites. Your local association of realtors, usually, I mean, they have a list of all of the licensed realtors and realtists in the area, and can give you, you know, if you can't find anyone, it's the easiest thing in the world to do. Next slide. They may even find you. But we just talked about title companies, so I think we can skip that about what they do. And same thing with the escrow officer, third party, independent third party, who is gonna make sure that the contract is followed and that everybody gets what they're supposed to get at closing. We talked about the home inspection, and that, like I said, that's something that you definitely want to do. They're going to go in and they are going to look at everything in that home that they can see without opening up the walls. If the house has a crawl space, they're going to go under there and, you know, take pictures. Sometimes you won't be able to see what's really going on. But, you know, I've had people who have had home inspectors find that, you know, there is structural damage that needs to be repaired. And it's not the end of the world if you find a home that has structural damage. But like I say, it's a negotiating tool. A lot of things can be fixed. And very often, if something has damage, you're not going to have that much competition, because most people are scared to go into anything that's going to need you know, work. When they hear foundation, structure, most people run, but that might be an opportunity for you to negotiate with the seller, get things fixed, or get a reduction in the price so that you can get things fixed in order to get that home. Like I said, when it's all said and done, you may have a home inspection report that it's going item by item, giving you pictures and a breakdown of everything that they find in the property, and telling you what's in good condition, what's in okay condition, but it's going to need some repairs in the future, and what needs something right now. Okay, so it's a great thing to have. And you really, even if people tell you, you might have an agent tell you, you know, don't get a home inspection because, you know, don't require it. But I would say, just to protect yourself, know what you're getting into. Next slide.
Here's a question, Lisa, in
Yes.
regards to inspection. So if there is a home that they made an offer to, and let's say they get the inspection back, and for some reason let's say the work that has to be done to the property is too big or major,
Expensive. Yeah.
would that make can the buyer back out, and what would that mean for the buyer?
Yes.
Because if the bank's not willing to lend on, then I imagine.
Yeah. Well, usually it really just depends. Now, usually when you're working with a good agent, and you know, I really haven't worked with a bad agent, but usually what they're going to do is tell you, once you get your offer accepted, that's something that they're going to do right away. They're going to, usually within a day or two of having your offer accepted, they're going to schedule, and they have a list of home inspectors that they usually can, you know, lean on and get to come up to the property. But usually it's going to happen pretty quickly, because within every contract, unless your agent changes it, you normally have 17 days to back out without any penalty. So you want to get your inspections and everything done as quickly as possible. so that you can say, okay, there's something here that is not okay with me, and there's nothing that's going to make it okay. You can back out and get your deposit back and continue looking. Yeah. So once you get your offer accepted, that's really the clock starts and you have to move. Okay. The appraiser, like I said, you're not going to get a loan without insurance or without an appraisal. So the appraiser is the person, like I said, who is going to go out there. Again, they're not going to open doors or anything, but they're going to look for things to validate the value of this property. And if there's anything that's going to take away from the value of the property, they're basically the eyes for the lender. And because your home is the collateral for the loan that you're getting, the appraiser's job is to go in and say, yes, this home is worth X amount of dollars. And usually the appraisal will come back either as is, meaning that it's this value without any repairs, or it'll say subject to, it's this value subject to. And if it says subject to, that just means there are certain things that need to be done. It might be repairs that need to be made before the appraisal will say, yes, it's worth this value. So if you get an appraiser to go out, and they come back and say, yes, this home is worth, $500,000, but it says subject to, there will be a list of things that need to be repaired. And so your lender is going to get that and is going to say, okay, the appraiser is our eyes, and they went out there and said, this is what's going on. In order for you to buy this property, the seller needs to fix X, Y, and Z. And keep in mind, when you're buying a home, you don't want to come out of your pocket to pay for anything because it's not your home yet, right? So if there are things that need to be done, it really is the seller's responsibility to take care of that, because it's possible that you could say, okay, I really want to buy this home and I'm willing to make the changes and do the repairs. And then it's possible that the seller could walk away and not sell the property for you, and you don't have to you, and you've just made an improvement to their property. So when it's subject to, let the seller pay, right? Let the seller do the work. And then what's going to happen, the bank is going to want to make sure that whatever remedy needed to happen is actually done. And so there's going to be a reinspection. The appraiser or another appraiser is going to go back out, take pictures, and make sure that whatever it is that needed to be done is done. Like it might be that there's a step missing. Let's say you have a home that has a backyard, and when you open the door and you step out, there's a huge step. And it's a fall risk, right? The lender is going to come back and say, somebody needs to put a step there, to make it safe. Or there might be broken windows. There could be a lot of different things. Usually it's a health and safety or sanitation issue. Those things, the home belongs to the seller. It's their responsibility. Don't pay for anything on the home until it's your home. Next slide. Okay, we talked about surveyor, what they're doing, and usually it's not an issue in the Bay Area, but although if you're going through a place like Naka, they will have a surveyor go out for every loan and make sure that the property lines are drawn properly so that you know where your home is and where the neighbors. We talked about insurance agents. Flood insurance is another thing that you aren't going to know from the onset if you're in a flood zone, but that's something that the lender is going to routinely do. They're going to do what's called a flood sort to make sure that your property is not in a flood zone. And if it is in a flood zone, then you'll have to, or a flood zone is an area that may have a tendency to flood. And if it's in an area like that, then you'll have to get flood insurance. The lender would be someone like me, a broker or a direct lender, is going to work with you to figure out exactly how much you qualify for and whether or not you're strong enough to be approved for a loan. And if so, how much your loan is going to be and what you're going to have to do to actually get that loan. Again, you can't, unless you're going to pay cash, you need a lender. Okay, so here's the meat and potatoes. There's a lot that goes into qualifying you for a home loan, not just qualifying you, but pre-approving you. And basically, the gist of it is that a lender wants to make sure that you have the income and that the income is consistent and you can rely on it to make your payments, that you have assets, and don't let that scare you, because I have plenty of borrowers over the years who came in with very little money, very little savings, because really the down payment is usually the biggest obstacle to home ownership. So you have to, you need some money, but you don't need 20% down, because some lenders will tell you, without 20% down, you're not going to be able to buy a home. I've had people come in with $5,000 and be just fine. The more that you have, the better. The less of your money that you spend, even better. You want to have your reserves, you want to have a cushion. Because let me tell you, there's nothing worse than getting into a home that you are all gung-ho and excited about, and you jumped through hoops and did, twisted yourself into a pretzel, and then you find yourself in a home that you cannot afford to make those payments. So you need to look at it up front and make sure that you understand exactly what you're getting into. And one thing that I always recommend is that, let's say you're deciding that you want to buy a house and you can afford a house that costs $500,000, and you've met with a lender and they're telling you this is what your payment is going to be. Let's say the payment is going to be $3,500. I don't mean to use these numbers because there might be people listening who aren't going to get a house that's $500,000, and there are people who are going to get a house that's more. But in general, what I always recommend is that you look at what you're paying right now. If you're paying rent, or if you're living with your parents and not paying anything, once you find out what your payments are going to be, take the difference, because it's typically going to be more than what you're paying right now. Take the difference between what you're paying now and what you're anticipating that you're going to be paying, and save that every month. So it does two things. It's going to let you know if you actually are going to be comfortable making that payment, and it's also going to help you with, building up your savings. Because like I said, it's nothing worse than getting into a home and then finding out that your quality of life is reduced because you really can't afford. Someone told you you can afford this, but in reality, you actually can't, and you won't have the quality of life that you're searching for. So when it comes to income and employment, typically we're looking at the last 2 years of your history. So where have you worked? Where have you lived for the last 2 years? Is your income stable? It does not mean that you have to have been on the job that you're on for the last 2 years. We just need to see a history of you working consistently for 2 years, either in the same line of work or improving, advancing in your career. And there's so many ins and outs. You can be a college student that's just getting ready to get your first job that has an offer letter, and you can qualify with that. But so don't let the process scare you, but you have to connect with a lender who understands that you're possibly a first-time home buyer and that you need some hand-holding so that you can understand what your options are. In terms of assets, we're of course going to look at your checking, your savings. One thing you do not want to show a lender is a bank account, a checking account where you have overdraft fees, or you have return checks and all that stuff. That's the number one sign to show that you are not ready yet. So you want to have all of that stuff cleaned up. If you're having issues right now with, paying your bills and all that on time, you have to work with a housing counselor, with your lender, just to make sure that you're stable where you are right now, and that you're going to be able to get to where you need to go. We're going to look at, if you have stocks, bonds, you might have cars that are paid off, all that is considered assets, money that you're going to get from down payment assistance, money from Wish, which is like probably the best program out there, because that is money that if you qualify for the program, it's forgiven. That's a rare thing. So if you can get it, you definitely want to do that. And then you can use your retirement funds if it will allow you to access a lot of 403B, which is the program for teachers. You can't often borrow against those kinds of retirement assets, but most things you can if you need to. Hopefully you won't. And then as far as debt, critical, most lenders want to know that you're not spending more than between 30 and 45% of your income on your housing and debt combined. So that's a good way to figure out where you are right now. We're going to qualify you on your gross income. That's before any taxes come out. We're not looking at your take-home pay. We're looking at your gross monthly income. So whatever your gross annual income is, you divide that by 12, and that's your gross monthly income. Take, depending on the program that you're going to use, between 30 and 45% of that. Some lenders will allow you to go up to 50%, but that's when you're getting into that scary territory where you're using too much of your income for the home to be affordable. But, there may be income that you have that you can't use to qualify. You might have family members that are going to live with you that will, be helping you. When you have that kind of thing and you're getting to 50%, that's okay. But if it's just your income, you don't want to go that high. And most lenders and down payment assistance programs are not going to let you go over, say, 43. Let's just say 43%. But I know that Wish is more like, what is it, Suhey? 30, 35, 38? What was it? 35%. So just depending. The thing to remember about lending is that, especially in the Bay Area, given that down payment is the biggest obstacle, you're going to need to work with people who understand what you're trying to do and who know how to do it, because very often you might call a big bank and you get someone who says, if you don't have 20% down, there's nothing we can do. We don't have any assistance for you. That's not the lender that you want. You want to work with people who understand first-time home buyers and who are going to say, okay, I know about this program. We might be able to layer different things to help you get there to an affordable payment. It's like affordable home ownership in the Bay Area. When you meet the income limits, it's like a big puzzle, right? There are some pieces that will fit together and will work to help you get that affordable payment, and then there are some pieces that won't fit together. So it's critical for you to work with people who understand that. This slide, we can skip this. So in general, though, the federal government says that your home is not affordable if you're spending more than 1/3 of your income on that home. So that's something to keep in mind. Cost to buying a home, where I know where I'm going way long, I'm sorry. But upfront costs, you're going to need your down payment, and keep in mind that in this market, when you're a first-time home buyer, you do not need 20% down. If you have it, that's great, and you are able to put that down, that's great, because it's less of your money that you're having to borrow. But if you don't have 20%, if you have even $5,000, depending on the price, or 3% or 3.5% of your purchase price, that's what you need. And then you can layer down payment assistance programs, or even just choose one or two of them. So down payment, another thing is earnest money that we talked about earlier, where you have to be prepared that when you get your offer accepted, your seller is going to want to see some money coming from you going into escrow to show them that you're serious and that you have some skin in the game. So we don't have that here, but we'll add it, the earnest money. And that is a part of your closing costs. It's not going anywhere. It's just sitting in escrow so that when it's time to close, it's there to help with your closing costs. Escrows or impounds are money that you're paying to the lender up front. Typically speaking, when you get a loan, your mortgage is going to include, as a first-time home buyer, it's not only going to include the payment on your loan, so your principal and interest, but it's going to pay your taxes, your property taxes, and your insurance. The lenders, when you're a first-time home buyer, they want to see that you have the money set aside and ready and available when your tax bill comes due and when your insurance bill comes due. So you're going to be paying to your lender every month, along with your mortgage payment, 1/12 of whatever your property tax bill is and whatever your home insurance bill is. So that when those bills come due, it's sitting in an account and your lender is going to make those payments for you. Mortgage payment consists of your principal, interest, your taxes, your insurance, and insurance includes mortgage insurance if you're putting less than 20% down. And we can go into more depth later on as we go through the series. Closing costs, generally speaking, when you meet with a good lender, and as part of their pre-approval process, they're going to give you what's called a loan estimate. And that loan estimate tells you everything that you're expected to pay into the transaction. And it's going to tell you whatever assistance that you might get, any gift funds. It's going to break down how much money you need and where all the money is going to come from, what your payments are going to be, how much money is held to the side for you to pay into your taxes and insurance when those bills come due. So you will have, it's a daunting thing, but your loan officer is the person who's going to help you understand exactly what your closing costs entail, what's included, and how much those are anticipated to be. Okay. Next slide. Okay, so I think, are we almost done, Suhey? We covered a lot, and we touched on just a little.
I know it's a lot that we covered, but like a lot of these things are going to be repeated through our series. This was more of like an introduction to some of the information that you are going to see going forward with our other series. So if you want, I can go to the next slide if you don't want to go into detail. Okay. So I don't see any further questions in the Q&A box. But as you can see here, our next series or the next presentation that will be made, it's going to go more deeper into the credit side of how to prepare yourself to be home ready. You know, and so basically this first presentation, what Lisa did for us here is she basically summarized what the whole buying process is going to look like. And so as she mentioned, she doesn't really recommend that you go really fast and try to find a home without working out some things that will prepare you better to be home ready. And a lot of it sometimes, as she's a lender, she can say that credit is very critical in getting a very good rate or getting a very good loan. So it's very important that if you guys are able to make it to the rest of the series, we really recommend it because she's going to dive deeper into what lenders are looking for when it comes to your credit. And as you can see, there's a lot to discuss. So it's into two parts. Our next webinar will be on August 31st from 5 to 6, and she'll basically go deeper into the credit part. And then on September 28th, we'll end it with the second part. On October 26th, then we'll go back to some of the steps that she mentioned earlier, which is shopping for a home and then protecting your investment, which it's your asset, it's your home. It's the biggest investment that you'll probably make in your lifetime. And then we'll finalize it with special financing. And that's when we'll go deeper into down payment assistance programs that are available to first-time home buyers. So that way, you know that there is assistance out there if you don't have more than 3% down. But yeah, this is what our webinars will look like. And I know there was a lot of information here. So if you want to go back and revisit some of Lisa's slides and some of the things that we talked about today, there will be a recording of this on our website, which is, I have put it on the chat box. It's www. And if you can see it down here, sanpabloedc.org. And you can actually also get in touch with me if you want to get Lisa's maybe information to talk to her about something that you may have a question about, or maybe you want to work with her. You can definitely either email me or call me, and I can get you connected with Lisa or any other lender that you may be interested in working with. But I do recommend that if you guys can make the time to attend this webinars, you will learn a lot on how to get ready and get all that information that sometimes other lenders are not willing to take the time to explain. Lisa has a very deep background for years and years, so she's more about educating the client versus just making a sale. And that's what you have to also make sure that when you work with professionals, that you do work with someone that you feel comfortable with, that you don't feel pressured, or if you don't understand something, that they're willing to answer your questions. Because again, you don't want to go into something like Lisa mentioned and you then regret it. We want this to be something that it's a good experience for you. And again, it's your biggest investment that you'll make in your lifetime. And we want to make sure that you have the right people aside you helping you. I do have a question that just came through, and I think it says, how can I see a replay of this Zoom meeting? And like I said, you can definitely visit our website, which is again www.sanpabloedc.org. This webinars with Lisa are very more detailed. We have other, I think we have a Spanish webinar and a English webinar of the same sort, where we had an insurance person, and then we also had a lender, and then we also had a realtor. That one, it's not as detailed as what Lisa's going to be doing, but if you want to look at those as well, you can. But this one is recorded, so if you want to go back and visit, I know that there was a slide that we didn't really get into. I believe it's the process of home buying. This is a tool that San Pablo EDC created. Sorry if I'm going too fast here, but you can definitely, if you want a copy of this, it's also on our website. We also discuss the different types of down payment assistance programs that are available. So I would really, really encourage you to visit our website to get information of some of the things that we discussed here. And again, if you have a very detailed question that you probably don't want to ask here, you can definitely email me, and or I can put you in touch with Lisa if it's more of a lending credit question, or if you're looking for a question for a realtor. We partner with other realtors as well, English or Spanish, and we can definitely connect you to those individuals. Another way that you can look at our recordings is through, we do have a YouTube channel, and it's, if you just type in San Pablo EDC, you can see all of our YouTube videos that we have available. So if we don't have any further questions, I'll just definitely check before I leave anyone hanging. Make sure I don't. So yeah, so I don't see any more questions. I hope that you have found this webinar valuable. And again, we do encourage you that you register for the other series that we'll be having. Lisa will go very into detail. And like I said, she has a really deep background when it comes to the home process and the lending part. She actually provided some of the HUD approved workshops that you need to attend if you're going to use a down payment assistant. It's an 8-hour, you get a certificate, and it's good for 1 year. And again, we'll discuss those things on the rest of the webinars that we have. So with that, I want to thank everyone for attending today, and especially to our speaker, Lisa, for making the time to educate us on the home buying process. So I look forward to the rest of our series. It looks like we had a really good attendance today, so that's great. And I hope to see everyone that was here on this webinar today on the next one. So with that, I hope everyone has a good night. And like I said, if you want to revisit this, you can go to our website or our YouTube channel. Thank you, everyone, and have a good night.
Good night.
Goodbye.